Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 4:45 in New York. It is Wednesday, 3rd day of October 2018, and this is the Daily Report for gold and silver. After gold and silver rose sharply in pricing yesterday, we have seen a pretty moderate decline today, giving up about half of the gains we saw yesterday. Although gold is trading above $1,200, it is only slightly above it, down $5.10 today, currently fixed at $1,201.90. Silver also losing about 0.2% or 3 cents, currently at $14.66. Platinum is currently trading down by 0.25% at $8.31, and palladium is trading marginally lower. I'm going to check it in the unchanged column at $1,050 per ounce. Now, that's all in light of a stronger U.S. dollar. U.S. dollar up about 0.4% and is currently well above 95 at 95.51. Interesting action in U.S. equities with the Dow Jones Industrial Average closing at a new all-time record high, 26,828. It is getting closer and closer to the next milestone of 27,000. Standard & Poor's gaining marginally 2 points at 29.25. And then lastly, the composite index also trading higher on the day, gaining about 0.33% at 8.025. Today's action negated what we saw yesterday in that we opened right at the 50-day moving average and then closed just below it. Yesterday's price gains, which took gold well above $1,200 per ounce, as seen in this green candle here, were pretty much taken away, with half of those gains diminished as the market moved back lower. I draw your attention to our 50-day moving average because the market came just shy of taking that out, and then in today's action, gold actually opened right at that price point and began to trade lower. So the real question becomes as to whether or not gold can continue to trade above $1,200 and form an effective base, or if we will see gold pricing and activity return to the overall bearish sentiment that has been so prevalent in the market since it traded to 1370 and tracked lower, at this point hitting a low of approximately 1164. To answer that question, we really have to go back to basics and what has been moving gold prices lower. And they've been really three major issues: a strong dollar, higher interest rates, and a prevalent risk-on environment created from a runaway bull market in U.S. equities. And to that end, we had the ADP report come out, which came in well above expectations in terms of new jobs added. The expectations were that in September, there were an additional 180,000 jobs added, and the actual number came in well over 200,000. Of course, we've got the Labor Department's jobs report coming out on Friday, and we also have the fact that the Dow Jones Industrial Average closed at a new all-time record high, and it is for those reasons that I believe we could easily see gold return to a bearish demeanor. A critical number right now is 1,200, and we'll have to see if this number can hold, especially in light of the strong, robust economic data that is coming out and what the jobs report will reveal on Friday, along with current dollar strength. My recommendation is to maintain our neutral stance with no active trades in gold or silver. And traders, speaking about silver, silver is also showing some of the same technical indicators that we have seen in gold, and that is in regards to the moving averages. You can see we have the 50-day and 200-day moving averages up. Yesterday's price advance in silver took it right to the 50, and today's action opened right at the 50-day moving average and then tracked lower. While it is true that silver is showing us a much more defined potential bottom with this rounded bottom that we have identified, we are not seeing follow through and the ability for it to trade above the 50-day moving average, which in my opinion is a necessary criteria before we would initiate a long recommendation in silver. And when we look at our daily dollar chart, we can see the exact opposite happening in regards to the current moving averages and price structure. We have the dollar index trading well above the 50-day moving average. The low that it hit today was just at the 50-day moving average, and we had a substantial upside break today, with the dollar index gaining well over 0.5%, 53 points, but I believe most importantly, closing above 95.38, which is the 0.23% retracement. I believe that was minor resistance that was taken out. We now have that out, and so our next resistance point is just shy of 97, and that is the top that we saw the dollar index trade to about the first week of August. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.